from Connecticut. Mr. Himes, who is also the chair of the Subcommittee on National Security, International Development, and Monetary Policy, is now recognized for 5 minutes.
Thank you, Madam Chair, and thank you all for being here. I first sat in this room in the first quarter of 2009 when the economy was contracting at an annualized rate of 10%, and I really did worry that a number of your institutions weren't going to survive the week. We have come a long way. Mr. Diamond, thank you for acknowledging, I think you said credit where credit is due, that Dodd-Frank was a big part of that. I was assured at the time by people on my side of the aisle that Dodd-Frank would crumble like a sandcastle in a hurricane. I was assured by my friends on the other side of the aisle that it would obliterate the banking sector. None of those things proved anywhere close to being correct. Credit where credit is due. We got through the mother of all stress tests in these last 2 years because of Dodd-Frank, but also because of your stewardship of the institutions that you run, and thank you for that, not just for not creating systemic problems, but for actually getting the PPP, which was so important to so many businesses in my district. I say all that just because I will forever focus on risk, and I have 3 questions about risk in 4 minutes. Mr. Diamond, 70% plus of the mortgage origination market has migrated outside of a banking environment. We've got a lot less visibility. Take a minute to talk about whether we should be focused on that risk. Mr. Moynihan, I'm going to ask you in a minute or so for non-obvious risks that Mr. Diamond doesn't cover. And then, Ms. Fraser, I'm going to close with you with a minute on, because of your global footprint, what risks are out there that we may not have jurisdiction over, whether it's Asia or Europe, that could get transmitted into our system here. Mr. Diamond, the mortgage origination market.
Yeah, I wouldn't call it systemic risk. It is riskier because the smaller companies cannot finance and advance funds to securitizations when there's a crisis. We could, and that we do need to reform it for the sake of the industry so that people can get mortgages at all times.
Mr. Moynihan, what risks are we not thinking about? What's the bullet we're not seeing right now?
Are you talking about in the mortgage business?
No. Generally.
I think
inside or outside of the banking sector. Sometimes I worry just as much about what's happening outside of the banking sector than what's happening inside.
I think when you think about the economy and where it goes to create risk versus in leverage, and honestly, there's more of that outside the banking system than inside, and that's something I think the FSOC and others should be carefully watching now in terms of funds, private lending funds that have leverage in them, private lending funds that lend at high leverage multiples. Our industry, because of the examination practices and, frankly, the way the companies are run, does not participate in them. So that's where I'd say a risk is. But it's always going to be about the economy and the demand.
So let me ask you to be just a little bit more specific there. When you say private lending funds, are we talking about CLOs? Are we talking about the high yield market? What are you talking about, and what should we be focused on?
It'd be all of them. In other words, that the amount of private credit, not only in mortgage, but every single asset class, more than half of it sitting outside our industry. And if you look at where the leverage multiples in individual deal get done, they tend to get done outside our industry at higher multiples due to the regulatory.
Okay, and I think you've all said this morning that you feel like your institutions are either adequately capitalized or perhaps overcapitalized. So are you saying that there are private non-banks that are undercapitalized relative to the lending they're doing?
Yes, but they'll have net asset value. In other words, their liabilities are interest in those funds that we mark to market, so you won't have the same kind of stress, but the impact on the economy of liquidating those companies by people who don't work the same way the banking system works for their companies could cause more damage than if we build reserves, we work out companies. This is what we've done for hundreds of years, literally. Other people don't have the staff to do that, so therefore they just sell them, and the liquidation process can cause more ongoing damage to the economy.
Okay, thank you. Ms. Fraser, let me close with you. Again, we have jurisdiction over some stuff, but not over lots of stuff. So what do we need to be wary of internationally?
When we look internationally, I think that what's happened from the pandemic and the war is it's highlighted a lot of fragility in the global economy. And therefore, we have to increase our concern around energy security, food security, cyber security, which will not necessarily all have an impact in the US, but there could well be spillover effects. So, for example, in Europe, the supply shocks in the energy market that they're facing could well be a factor affecting the US economy next year as demand slows and they enter a highly likely recession. So the interdependencies and these fragilities are going to be the pieces we have to keep an eye on.
So connect that for me. So you identified energy and food. What's the mechanism of transmission? I get the economy if there's an economic slowdown, but what's the mechanism of transmission in which by global energy or food markets actually create a prudential problem for you?
It could result in, if there's a material energy shock, you could see it continued in Europe, you could see industrial production shutting down this winter, you could see people who are cold, and that can have different discontent from their populations, and that could then translate into lower demand, and therefore lower demand for American goods and services, and impacts into the U.S. economy. So that's where the main mechanism would come from.
Thank you. Thank you. My time's expired. Thank you, Madam Chair.
Thank you very